Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, October 15th, 2009. Well, folks, the markets are just slightly to the downside today on the back of some Goldman Sachs results that, while they beat estimates and actually blew out estimates, were not quite as high as they needed to be to keep the markets up. And I want to explain that a little bit because I think it's very, very important. But first, let's go over the Dow. The Dow is down 14 points, the Nasdaq down 8.5, and the S&P down about 2. So really, we're talking about 0.2% to 0.3% losses here across the board. That's very, very minor considering the up move we've had of late. If anything, this could be called a pause day. Now, there's a couple things we need to talk about. Number one is we want to talk about what happened today with Goldman Sachs. Goldman Sachs reported earnings this morning before the bell, and they came out beating by $1.01, so they beat by a large portion. But the bottom line was, after JP Morgan's earnings yesterday that blew out estimates, Goldman Sachs had to outperform even the higher earnings beat by JP Morgan. In other words, they really had to outperform even more now based on the fact that JP Morgan had such good results yesterday. And that's really the bottom line, what you have to keep in mind. Whenever a stock comes out with earnings prior to another stock that's in the same sector, and those stocks beat early on, the later stocks have to outperform those secondary ones as next plays to keep the market going higher. Again, that's very much seen here with Goldman Sachs. I'll show you the chart on Goldman Sachs. Goldman Sachs actually at the lows of the day down $5 right now. Look at this. Look at the lows of the day. You actually just took out the lows of the day right here. Beautiful little hit. Here was the previous low of the day. You're piercing it now. We pierced it before. Now we're trading back down. If you close below there, by the way, guys, this is actually a major support line on Goldman Sachs because right here is gap fill. So you're hitting gap fill right now. There's a lot of support here on Goldman Sachs, and it'll be interesting to see if this can take out that gap fill or do you get a bounce. Usually you get a good solid bounce at gap fill. We'll have to watch and see if that does happen. All right, so watch that very, very closely, guys. I do think this is going to be very key. All right, number one, let's go back to the SPY chart and dissect the intraday moves. Number one, you did gap lower today on the back of Goldman Sachs. We had some initial claims out today, about 514,000 new jobless claims in last week's data. Now, that again is a pretty sizable number, but it constantly is slowly increasing, which gives a little hope that eventually it will get down very, very low. But any way you cut it, folks, if you have a 500,000 plus people filing for unemployment every week, that is not a good sign, folks. That is not a good sign by any stretch. Although, again, the market took it with a slight bit of a pause today on the back that it is a continual slightly lower. Every week seems to be about down 10,000 or so. So we'll continue to watch those numbers progress. Now, CPI also came out, and CPI was a little worse than expected. Then at 10 o'clock, we had the Philly Fed. Philly Fed was actually a little worse than expected. But Philly Fed and the CPI kind of on the back burner. It's all about earnings right now, and it's all about the jobs data. Those are the two things that mean anything. Today, after the bell, you have Google reporting, and I believe IBM reports, AMD reports. So technology is going to be a big mover most likely after hours today and tomorrow. Be aware of that. Be ready for that. Be aware of it in regards to current positions you may be holding. You want to be ready for any type of volatility. Could be up big, could be down big. We're going to find out with Google and Google and IBM after the bell is the big ones. AMD's kind of secondary at this point. AMD will be interesting because it'll see, do we confirm the Intel news? Is Intel company specific, or is AMD kind of going to be along the lines of Intel as well? So all that kind of stuff will be important. Now, again, the market gap slightly lower and pushed up very nicely. The market pushed up here, got above the 20 moving average. We actually moved up right into this gap fill area right here. See this right here, area of gap fill. We pulled back down below. Where did we go? Down to this trend line. Now, how do you get these trend lines? Basically the 50 moving average. I mean, that's essentially what it is, but you can also connect this low pivot from yesterday to this little fake print down here and right through these lows, and you'll see that the market's basically trading right along that line. And again, as the market comes down, right to the 50, right to that green trend line, bounces up, back to the 20, then pulls back to the green trend line, which is also the 50 moving average right there above it. You can see right there, and then moves back to the upside and then pulls back again right into a little bit almost of a necktie. See how the 20, you got above the 20, then you pulled back to the 20 right here, which is also now close to the 50, and now the market is popping back up. So again, folks, it's been one of those quiet days overall. Believe it or not, the volume, I mean, look at the volume today. Very, very minute volume considering how heavy it was early on, and it's about 1:30 p.m. Eastern time right now, and the volume has just basically gone to zero. I mean, we're trading actually lighter volume than it looks like we did yesterday, or on pace to do it. Yesterday, again, it was not a heavy day at all. Generally, what I look for, folks, on the spiders, 200 million is low average. 250 million is probably about high average, and then if you get above towards 300 million, that's a big day. We haven't even gotten close to that in the previous days, folks. I mean, even in the last week or so, we've had 1 or 2 days over 200 million. Those happen to be down days on the SPY and volume. Other than that, if it's under 200 million, this market's flat to positive. That's just the way it's been. That's the way it's going to continue to be. It looks like when there's no volume participation, they're able to prop this market up, all right? So keep an eye on that. Watch that. Again, volume today is relatively on the lighter side. That generally tells me that it's going to be a flattish day, maybe even a positive day, and we'll watch for that into the close. Nice pop here on the spiders. Again, notice the pullback here. 1, 2, 3, 4, 5, 6 pullback right into that yellow trend line, which is the 20 moving average, the blue trend line at 109, and the pink trend line or purplish trend line right below, which is the 50 moving average. Off of that, you get a nice pop here. Now, right now, you're dealing with this line. See this line? This was the high here from the little bit of a gap from this low candle pullback before we pushed up. If you make a move up, you're looking for the highs of the day here, which again will be right around 109.45 to 109.50-ish. That's going to be a very good double top. The question is, are we going to continue up and to really get into the middle section of the master level that I've been watching here? And again, that I can't really go into details. That's more for our premium subscribers. You need to know where that level is. You need to understand where that is. But nonetheless, good push on the spiders here, folks, as the market is making a move up. And again, look at the chart. The charts told you that. 1, 2, 3, 4, 5, 6 pullback right into the 20, into the 50, and the blue line and the green line all together in that master level. That's what I call when you have all those levels in a 5-cent range, and we're talking about the 20, the blue line at 109, the 50 right below, and the green trend line. When all those come together in such a tight area, that's huge support. That's like, think about it as if it's a one metal door, right? And that's your initial, that's your 20 moving average. But what if you put 4 metal doors back to back? Think about how much harder that is to break through in addition, or wooden doors or whatever, plastic doors, doesn't matter. If you put 4 of anything, it's going to be a lot thicker, and sure enough, off of that pullback, look at that pop right back up. That's a beautiful example of that, folks. Where are we going? Right to this. This is a little minor resistance, just minor. Why is it minor? Because you already went up once, twice. The third time is only minor. Oftentimes you break through it on the third time, or there's a decent probability, a 50-50 chance of breaking through, while the other times, the first time is about an 80% chance of a pullback, second time is about 70% chance. Now you're only back to about 50, so there's a 50-50 chance here, and you don't want to look to short that in general, that level, because of that. The second time is okay. Third time you want to step back. And again, these are general rules we guide in the research center. Again, everything in the research center is included. All of this stuff, again, pertains to that. You need to learn this stuff. It's very simple. You can apply it to any time frame, weekly, monthly. If you're a swing trader, investor, a long-term investor, a day trader, it doesn't matter. It works on all time frames. That's the beauty of it, folks. Bottom line, all right? So again, nice pop here. You're seeing a little bit of minor resistance, but not a lot there. Now, if we move up, guys, again, watch this double top right up here at 109.42-ish. That will be good double top resistance from yesterday's high. If we start to pull back, your big level on a pullback is going to be right here. This is going to be your big level right here at 109, 108 and change, high 108s, 108.90 to 95, 109, right in this area, because there's so many levels here. If you can get through that, you should go test the lows of the day right down here, which would be at 108.74, 108.75, and if you break through that, then you can really start to come down, possibly all the way down to 108.40, 108.35. All right, folks, again, join the chat room. That's awesome. For those of you that have a few hours intraday, that's perfect for you guys. Come learn. You'll get one-on-one, really. We talk to you. We answer questions. You get a big group of people, but they're all, it's one-on-one. We'll answer your questions directly. You'll see these charts exactly as I see them, as we're guiding you through live intraday analysis. It's fantastic. Also, the Research Center is always a classic, guys. And again, the guidance in that is second to none out there. We give it to hedge funds. We give it to the average person out there. So come join. We'll see you soon. Take care.